What's up, YouTube? Hope you guys are doing well. Tesla updated some information yesterday, gave us an update on deliveries and production of vehicles. Now, there are two critical things that I want to focus on in this video. I'm going to give you an update and some thoughts on where Tesla could be headed next. So in the third quarter, Tesla produced over 430,000 vehicles and delivered over 435,000 vehicles. I'll give you the exacts here in a second. A sequential decline in volumes was caused by planned downtimes for factory upgrades, as discussed on the most recent earnings call. This next part is critical, and we'll talk more about this later. Our 2023 volume target of around 1.8 million vehicles remains unchanged. Another thing to point out here is we have earnings in just a couple of weeks. So October 18th, we're going to get Q3 results. So here are the actual numbers: 435,059 for deliveries, production 430,488. And of course, you can see in the previous quarter, deliveries and production, the numbers were higher. We had 466,140 and 479,700 respectively. Now, if we go to the same period in 2022, we had 365,923 for production, deliveries of 343,830. So looking year over year at Q3, the numbers are significantly higher, but they did miss Wall Street expectations. So you can see here, this is nearly a 7% decline in vehicle deliveries. Yesterday, the stock closed up 251.60. It's down slightly today. It's back below $250 a share. And as we discussed, we knew about this from the earnings call. So this is a quote here from CEO Elon Musk. Continue to target 1.8 million vehicle deliveries this year, which they reiterated yesterday, but expected third quarter production to decline slightly following summer shutdowns for a lot of factory upgrades. When you think about factory upgrades, what's that going to do? It's going to make these factories more efficient, more effective, so they can produce more vehicles. So perhaps short-term pain for longer-term gain. It also talks about how Tesla at this point is not reporting on production or delivery numbers for the semi-truck. We know that Pepsi has some of these actually in operation, but that's about it at this point. So when you look at future opportunities, of course, more semi-trucks, that's a big opportunity, Cybertruck, and much more. Now, Wall Street was expecting Tesla deliveries to reach 461,640 for this period ending September 30th. And this is according to analysts. It's a consensus analyst report that's pulled by Street Account. It also talks about an independent researcher, basically somebody on Twitter, on social media, that were actually a little bit closer, expecting 441,000 vehicles. Also important to note here that Tesla has revealed a revamped version of Model 3 dubbed the Highland, with both new exterior and interior features, and started selling it in some regions outside of the United States. So this has upgrades like touchscreen display for rear passenger seats, ventilated seats, and others. This article on TechCrunch is saying that the result here missed Wall Street expectations, nearly 7% lower than previous quarter. So of course, the positive here, Tesla is still targeting that 1.8 million deliveries in 2023. Now, Tesla has delivered 1.32 million vehicles so far this year, so that leaves a gap of about 480,000 vehicles left by the end of the year. Now, the second thing, and this is absolutely huge, and I think it's hard to follow this. There's a lot of information. There's a lot going on. When you look at the UAW strikes, so the auto union strikes, they're requesting a 40% pay increase. Now, of course, that's just a starting point, but if you look at what they've done, they've really thrown the playbook out. They're being crazy aggressive here, and we've had some commentary from CEOs of Ford and GM, president of GM, saying, this is basically going to put us out of business. And Elon Musk actually tweeted about it as well, saying exactly that. So let's dig into that a little bit closer and see maybe who the winners and losers might be from this.
The United Auto Workers Union, the nation's largest auto union, voted to authorize a strike.
The union expanding the walkout across the country.
We're talking nationwide, California to Pennsylvania.
So right now, over 25,000 union workers are on strike, and that number is increasing. Of course, that's for what we call the big three: Ford, Stellantis, and GM. Now, demands include a 40% wage increase over 4 years, better retirement plans, cost of living adjustments, and a 4-day work week. Now, this would raise the total all-in cost per employee per hour to $150. Now, that's more than double what the number is today.
It hurts everybody. It hurts our employees. It hurts the communities where these plants are.
There's no way we can be sustainable as a company. You want us to choose bankruptcy?
So when you look at automotive, and you look at automakers per cost hours, and you can see on your screen here, Tesla is the lowest by far at $50 and foreign at 55. The big three are in the 60s, and they're trying to increase that significantly. We saw earlier that all-in cost about $150 per hour. Now, there's a lot to unpack there. Let's first look at the macro and how that would impact the macroeconomics, the overall economy. So 40% is a starting point. Unless they don't get 40%, but even if they get 15 or 20%, what that's going to do is set a precedent for higher labor costs. Now, right now, as you know, we've had inflation issues, so the Fed is raising interest rates trying to combat that inflation. Higher wage inflation is going to make inflation overall stickier for longer. Now, let's say that they get no raise, and so you don't have the wage inflation issue, but now you have the strike that lingers on. It can linger on for months. That's going to impact things like gross domestic product, just overall production, employee salaries, the amount of money being spent in the economy. So this is really a lose-lose deal. And I'm talking about the economy here. So obviously I want what's best for American workers. I'm not saying that I don't believe in that. But if the UAW wins, especially if it's a significant number, that's going to put pressure on overall wage inflation, set that precedent. Now, who are the beneficiaries from this? Well, first and foremost, you can look and say foreign, because foreign automakers, they're able to make their products cheaper. So you heard from Ford and GM, from the leaders there, saying that this could potentially put our companies at risk of bankruptcy. So you have other companies like Toyota and Honda and Kia and so on. Those are beneficiaries. Now, when you think about the pivot from ICE vehicles to EVs, electric vehicles, beneficiaries will include, first and foremost, Tesla. It could even include EV makers such as RIVN, Lucid, and so on. So Tesla's workers, as you know, there's not a union there, and it makes the cost lower. And the company has defended that by saying, we have a great stock option plan. In fact, Elon Musk tweeted, that if they go to a union, there's nothing stopping Tesla workers going to a union, but then you have to pay union dues, and you're probably not going to get Tesla stock compensation. So the employee Tesla stock compensation plan, and that has made a lot of people, especially if they've been with Tesla for a long time, it's made them a lot of money. Now, the problem is that's the past, so you don't know what Tesla stock is necessarily going to do in the future. And you might remember this whole saga when Elon tweeted that, basically saying that that was unfair. They tried to make him take the tweet down. They defended it, and the tweet is still up. So Tesla can already make EVs much more efficiently than the big three. They're way ahead in the cycle in terms of just the factory output and so on. And the big three, they're struggling right now trying to pivot from ICE to electric vehicles. So many would argue that this is going to put more pressure on these companies, and many people think that it's just inevitable. It's a matter of time before maybe one, two, or maybe all three of these go out of business. Now, the other thing I want to point out here, we talked earlier about the 1.8 million. That's about a 33% increase, which is still pretty solid when you think of the macro conditions, the overall environment. The question is, we have student loans that just came back into place. So many of you, over 40 million Americans, now have to pay student loans. And this is something we haven't seen before. It's been a couple of years since people have had to pay for, student loans and their payments. And when you think about the overall U.S. economy and GDP, 68 to 70% relies on consumer spending. So inflation has increased prices, but then also the Fed trying to combat inflation, increase interest rates. So it's more expensive from everything from buying a car to buying a house, your mortgage payment, your rent, and so on. So the average American is getting squeezed in many different directions here. And what happens when the consumer runs out of discretionary income, a disposable income to spend on the economy? There needs to be money left over to spend on things like Starbucks and cars and so on. You get the idea. So this is why the bears are in the camp of we're going into a recession. And you certainly can paint that picture very easily. The unknown is, when is the Fed going to pivot, pause those rate hikes and go the other direction, actually start decreasing interest rates? This could take some time. It might be 6 months before you see it happen. And what happens with the economy in that 6 months, in those two different quarters? Remember, all of our economic data is lagging. So CPI is lagging. We just don't really know. And it's going to be data dependent, and the market's going to continue to be volatile. Now, with all that said, I'm going to give you my thoughts on Tesla stock. Before I do that, if you're new here, subscribe to the channel, click that bell for notifications. If this video is helpful, drop me a like and drop me a comment. Now, I'm actually adding more Tesla on weakness. I prefer the stock below $200. I liked it a lot when it was less than $150. We were adding that heavily in Discord. With all that said, I'm looking looking at buying more Tesla stock, adding more Tesla stock, because I think longer term that Tesla is going to be a beneficiary. 1.8 million vehicles is still very positive for the company given the macro. There certainly could be headwinds. The stock could certainly go lower if we go into recession. Of course it will. But when I think of 5 and 10 years out, Tesla already dominates the EV market in the United States. Their chargers are basically the industry standard. Everybody's using them. It seems like every day someone else comes out and says they're going to use Tesla electric vehicle charging as their standard. So they're creating this network effect, this ecosystem for their customers. They're building new products. We talked about the Semi. We talked about the Cybertruck. When you look at FSD, full self-driving, and their AI capabilities, nobody can even touch them. We've talked about on the channel before how Tesla could really be more of a software as a service type company. You could make FSD a subscription, a software as a service subscription plan for other automakers to actually use their FSD service. Autonomous driving is the future. It's going to take time, but it's coming. It is coming. And then you think about robo-taxis. Of course, that's why ARK is so bullish on robo-taxis. I've covered that in detail on the channel here before. You've got moonshots like Optimus, which I don't even really include in my data when I'm trying to predict what the stock's gonna be worth. And I've done a video on the channel, if you haven't seen it, predictions for Tesla stock over the next 5 and 10 years. Go check that video out after this one. But I hope this video is helpful. Just an update on Tesla and my thoughts. I'm gonna be buying more shares. The lower, the better. I appreciate your time and attention. Have a great rest of your day. Take care.